Now, also another market which you definitely want to just have on your radar right now is oil. We do have the oil inventories coming up today, which is going to be in the next 1 hours. So at 4 o'clock time, we have broken below a key level of support here on oil, which was 53 US dollars per ounce. Per barrel, excuse me. What was important about this close was the fact that we have not only broken below support, but we've also closed below it, and we've had a very decisive close here too. Also been looking at the weekly chart for oil, and we've been rolling over, forming a V-shaped reversal pattern. I certainly see the potential for oil to come down lower in the short term. We have got sell short positions on this market. You can draw in very clear overhead major trend channels just on the weekly chart, where we've just seen the price between these levels. At the moment, short term, I'm looking for a move back down to the 50-day moving average, which sits at $50.07 per barrel. So from where we are at the moment, it's about a $1 move from the current price. So a move from 52.50 down to approximately 50.75 is what I'm looking at in the short term. Beyond that, if we see oil continue to break down, and if we do the move to the downside, I would look at 50 is the next major zone, previous resistance, turn support, short here. Our sell short is currently in profit. We are going to keep an eye on the oil inventories coming out this afternoon. The fact that we've had failed breakouts today, I would say bodes well for the sellers in this market, and the overall technical control right now is in favor of the sellers. What we saw at the beginning of January was this breakout to the upside. So oil broke above the 18-month highs, and we saw essentially a bull trap quickly after that breach, 18-month highs, which would have triggered traders into position here with a break of major levels of resistance above 55 US dollars per barrel. Very quickly, we saw oil sell off over 300 points, produce a bull trap. So a bull trap is when you essentially see buyers get trapped into a trade. They've been triggered in at the highs. The market just completely reverses. And then because it's reversing so quickly, a lot of the traders who've got in at a higher price are being just punished for their late entry market. And with that, you see sell-off as traders are getting stopped out of their position, and that exacerbates where you get a very quick, fast bull trap, and that produces a large candle on the daily chart, which often is a bearish engulfing candle. Exactly what you've got here. We had a retracement back towards the upper end of the trend channel. Oil has really failed to close above 55 US dollars per barrel so far this year, and you can see lower highs, lower lows. We're just ricocheting between support and resistance. There are some larger channels on the weekly chart as well, and also on the daily chart. We have movements back towards resistance. Another one on Tuesday, we broke out above the last 3 days worth of consolidation. See an inverse hammer produced into the close that has been breached to the downside. So far, limited momentum so far today, but I am looking for lower prices. So just for those of you who trade oil right now, we're looking for a continued move, and ultimately in the short term, I'm looking for a retest of the 50-day moving average and the monthly pivot, which sits at 50.75. And then, of course, we'll continue to assess the price structure. Not necessarily saying we're going to significantly lower than that. At this point, short term, those are the levels that we're looking for to target, and then less if we do come down to that zone, how the price structure is looking for a revisit of that level.